last week we had one of the worst days for the S&P 500 and actually one of the best days in the history of the index, with swings over 10% in both directions. And President Trump actually posted "buy now" on his social media. The main question most people are asking themselves right now is whether we're in the clear and it's all over in terms of volatility. The answer to this question, what's happening with gold, Eurodollar's massive rally, and of course some lines on charts in this week's video. So, before we start, I'm Ivo, the Chief Market Analyst at Delta Stock, and feel free to like and subscribe to this video. Let's get to it. To know the answer to whether markets are in the clear, we need to go over a couple of things. The current geopolitical situation, some macro, what the Fed is willing, and the, of course, technicals. I will not, however, hold you hostage and give you the answer straight away. We are not in the clear. So let's start with the geopolitical situation. While we got a 90-day relief for some countries, China is still subject to 145% tariffs, at least at the time of making this video. There is still a 10% baseline tariff on all imports and, of course, 25% on aluminum and autos. Basically, the net weighted tariffs after Trump's pause are still higher and more or less the same as before Trump blinked. China increased tariffs to 125%, but the important thing is that when they did that, they said they will not go any higher. And this is definitely an attempt to de-escalate, but unfortunately, we still have not seen what Trump will decide to do. In addition, the tariffs are still on hold, but they are not cancelled. So basically, the US president is kicking the can down the road, and this means risk remains elevated and will likely remain such in the near future. The next risk is recession. So according to Polymarket, which is a betting site I personally like checking, the odds of a US recession in 2025 are about 55%. So this is not a massive risk-on signal. The next thing is that we're also looking at Trump threatening the potential delisting of Chinese companies from the US exchanges. So this has been one of the major risks, because of which I have been avoiding Chinese stocks. And by the way, speaking of China, there's also the risk of China selling their own bond holdings, as this will increase the yield on US bonds. And like you probably already know, the bond market is what Trump is watching. And this is unlikely as of now, so don't sell your stock, but it's still a risk worth noting. On the Fed situation, so right now US yields are still high and they are likely to limit the Fed's ability to cut. So their hawkishness is seen in some of the FOMC member commentary we got last week, and especially Schmidt and Logan. So they both said that inflation risks remain high. And don't forget that the rather hawkish minutes from Wednesday, so the Fed meeting minutes were rather hawkish, and this leads to the conclusion that the aggressive rate cuts Trump is looking for might not come. You can now see that he's rather frustrated with this, and he's trying to attempt to pressure the head of the Federal Reserve, which is Jerome Powell, from his office before his term actually ends. So if Trump's plan is to slow the economy and get the Federal Reserve to cut so growth picks up again, this is a major risk, because basically the Fed does not want to cut right now. So An additional data point is that on Friday we got some soft data and it was, well, awful. The University of Michigan sentiment was 50.8, which is below the consensus forecast of 54.6, and actually this is the weakest level since mid 2022, sorry. And the fall was driven primarily by the forward-looking component plunging to 47.2, and the price side, on the price side, the one-year inflation expectation surged to 6.7%. Yeah, that's right. So 6.7%, and this is the highest reading since late 1981, and the 5 to 10 year inflation expectations are at 4.4%, which is double the Fed's target of 2%. And basically, whichever way you look at this data, it's a major deterioration of America's soft data. And hard data is still holding up okay-ish, especially given the situation, but the more this current uncertainty holds, the higher the odds that hard data follows soft data. So hard data is what we see, and soft data are the expectations. So yet another risk. Does this mean the market will crash? Well, no. Note that we have stabilized above the local bottom, and we should see some supportive flow as we near the April options expiry. So some bearish pressures will also be alleviated by then. But of course, this is if we do not have any surprises from Trump, China, the Federal Reserve, or of course, data. So does this mean a massive rally? Well, no. Credit default swaps remain elevated, as well as the VIX is in backwardation. This means that the spot price is higher than the futures price, which is basically a bullish sign and indicates traders are still uncertain and are buying the VIX. And in addition to the VIX, the index is actually trading above 45, which again indicates volatility is likely to remain high. But if it starts to decline, we might see a more risk-on mood in the markets, especially if it goes below 40 and then 30. So speaking of levels, it's of course time for some lines on charts. I'll start with the S&P 500. So first, we are still below key technical levels, as well as the trend line you can see on the screen. So to be more bullish, I'd love to see the index close above the level at 5,500 and consolidate for a bit while breaching the mentioned trend line. So we are likely to see some supportive flows this week and probably test 5,500, but please know that this is a news-driven market and technicals are often disregarded when Trump decides to basically tariff some country. If you watched my previous video, you know I was expecting upside in the euro dollar, and man, that rally was very strong, over 350 pips in a week. And right now, I'd like it for it to consolidate before making another call. And in times like this, trailing the position tends to be a good move. So we are likely to see a test of the last local high before going higher. So keep this on your watch list. The dollar yen has also been performing according to expectations, with the yen gaining quite a bit versus the greenbacked. So for now, things are not looking good for the dollar, likely to retest the level at 144, and we'll go from there, basically. Gold has been on my watch list for more upside since last week. and it hit an all-time high above 3,200. So this is, I think, 200 points higher than the last week. When we were looking at the retest of 3K and were noticing this bullish bullish sign. Right now, we could see a move higher and retest of the bridge. And if it's successful, it tends to lead to some more upside. Silver is following higher, but keep in mind that recession fears tend to weigh on silver, and this is because it's basically involved in manufacturing much more than gold is. In addition to the whole geopolitical scene, it's actually earnings season, so the most important earnings report to watch out for are Bank of America's and Citi's on Tuesday, ASML on Wednesday, especially if you're invested in AI stocks. Also follow the regional banks like First Horizon for stress, and TSMC and Netflix are on Thursday. Definitely expect some cloudy guidance on those earnings calls as well. The next thing is the events you need to have on your calendar. So on Monday, these are the USB auctions and Fed's Waller and Harkers pages and some trade data from China. Tuesday, a ton of data, job market in the US, European Union, and German's U surveys. Yep. CPI for Canada, trade data for the US, and the Empire State Manufacturing Index. Keep an eye on the Red Book as well. Wednesday brings China GDP, UK CPI and PPI, European Union CPI, and importantly, US retail sales and a speech from Powell. Listening to it, it's an absolute must if you trade more actively. On Thursday, ECB rates, if you see them become more hawkish than expected, we could get some selling pressure, so definitely keep this on your calendar. US jobless claims are also on Thursday. Friday is a bank holiday, so that will be the end of the week. And that's it. That's also the end of the video. Leave a like if you find these videos useful, and see you next week.